Ladies and gentlemen, good day and welcome to FDC Limited earnings conference call for the quarter ended June 30th, 2022. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the brief highlights of the financials from the management. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I would now like to hand over the conference to Ms. Varsha Rani Katre, Company Secretary and Compliance Officer of FDC Limited. Thank you, and over to you, madam.
Thank you. Good afternoon, everyone, and welcome to all of you. Glad to connect with you all for this quarter-ended earnings call. We have already disseminated the financial results of first quarter ended June 30, 2022, and the investor presentation as well. Now, I would like to introduce the FDC team present in this earnings call. We have with us Mr. Nandan Chandavarkar, Joint Managing Director, Mr. Ameya Chandavarkar, CEO International Business and Executive Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. Mayank Tikka, AVP Business Development and Commercial Excellence, Harshal Jain, Assistant Manager Corporate Strategy. We will begin the earnings call with the highlights on the financial results of the company by Mr. Sanjay Jain, CFO, followed by an interactive Q&A session. There might be certain forward-looking statements. These statements are subject to certain risks and uncertainties since they are based on certain assumptions and expectations of future events. I would request all the speaker participants to restrict their queries to 5 minutes only and avoid repetitive queries to save upon the time. With this, I shall now hand over to Mr. Sanjay Jain. Sanjay?
Yeah. Thank you, Varsha. Good afternoon, all. So I will take you through the financial results for the quarter ended June 30th, 2022, and we'll try to summarize all the key points during the quarter. So to begin with, the company has delivered the overall revenue growth by 11%, and we are happy to inform you that all the verticals have contributed for the quarter on a positive note. On the domestic formulation business, company has continued its growth trajectory, and it has given the growth of 8% in spite of the high base of the last year, when we have achieved the growth of 68% in our domestic formulation business. Also to be noted that in the last year sales, which includes sales pertaining to the COVID-related product, so if we exclude that, then the real growth would have been somewhere around 15% for our domestic formulation business. However, having said this, this growth has been largely driven by our major brands like Zifi, Electral and Energel, and also by some of our food range of products, apart from the other formulation products. We are also pleased to inform you that our Electral brand has now moved to 34th rank in our IPM on MAT June 22 basis, as against 37th rank of last year, same period. On the export business front, from the standalone perspective, revenue on a YOY basis is up by 42% for formulation business and 25% for API business. The increase in the formulation business is largely on account of increased supplies to our US customers, apart from the other markets. We also wish to inform you that company has filed an ANDA application for olapatadine hydrochloride ophthalmic solution 0.2% during the quarter. Now coming to the gross margin side, if you have gone through our results, you will notice that there are some impact on account of gross margin. So in terms of percentage, it's around 5% for the quarter, which on account of the elevated prices of raw and packing material prices. In terms of absolute value, it has impacted by 34 crore for the quarter. However, with the inflation is getting stabilized and our supply chain getting normalized, we may see some respite in the elevated COGS level going forward. This will further ease, means the COGS level will ease with our increase in the finished goods sales price, as we have taken the sales price on our scheduled formulation at around 10% plus, which will have a positive impact on our margin going forward as well. On the employee cost, we have maintained at around 20% of our revenue, which is slightly lower than the last year same period. However, in terms of the absolute cost, it has gone up due to, as you might be aware, we have launched a new division in our domestic formulation business, and also on account of the annual appraisal cycle. Coming to the operating expenses, which includes the temporary provision for the fair value impact on our financial instruments, which is around 15 crore on account of the mark-to-mark impact with the halting of debt instrument yields and correction in the NAVs of the financial instrument. But however, these are up to 30th June. But with the current rebounding of market levels, the entire provision has been written back with the softening of the yields and improvements in the NAVs. Apart from this, in the operating cost, there are increase in the sales and marketing, production and logistic cost, which are due to increase in the overall revenue base. And with this all impacts, the overall EBITDA margin now stands at 20% for the quarter, as against last year 31%. And so is the reason for a decrease in the overall profit as compared to the last year same period. Thank you. Varsha?
Yeah. Thank you, Sanjay. So now I request moderator to initiate the Q&A session. Over to you, moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Ahmed from Unifi Capital. Please go ahead.
Thank you for the opportunity, sir. My first question is on the domestic business. So, considering that we have grown a very high rate, considering the base we had in last Q1, can you help us understand a breakup of revenue growth? So, what is the volume growth? How much is the price hike?
Yeah. What growth is the breakup of it? Breakup of value and price. Value and price. Volume and price. Yeah, so I'll help you with that. Our growth overall has been 11.5%. The volume growth is 7.6. The price growth is 2.1, and the new product growth is 1.8. So you'll understand from here that still our majority of the growth is coming from volume growth. There is a unit-wide growth on our products.
Okay, so entire 10. Sorry to interrupt you, Mr. Ahmed. The audio is breaking from your line. Please use the handset mode.
Sure. Am I audible now?
Yes, sir.
My question is the entire 10.7% NLEM price hike is effective from April, or there is some portion that will come for the quarter in Q2 only?
Yeah, so when Sanjay mentioned that we have taken a price rise that is effective from April, But honestly speaking, the price rise is still to go in the market. First quarter, only 50% products would have gone with the price hike because we had inventories in the pipeline. So for our major brands, Electral and Ziffy, the price rise has gone effective from the month of May and June. So you can say there would be some impact of it, but not much of it because the price rise still shows us 2.1%. As we move forward in the second quarter or maybe the third quarter, this price rise growth would be still higher. As Sanjay mentioned that we have taken a 10% hike on an average. So by the maybe end of second quarter, probably the entire price rise would be visible.
Got it. And on the gross margins front, so there is about 5% YOY decline. So can you help us understand what percentage is because of increase in the solvent prices, raw material prices, and the packaging portion? And how do you see it going forward for the next 2 quarters, 3 quarters?
So the overall impact in terms of percentage on the margins is around 5%, which is purely on account of increase in the raw material and packing material prices. So going forward, we will not like to comment as of now. So as I mentioned, if the inflation remains at the same level, we might see some stabilization in the margin. But with the inflation cooling off and the prices coming down, we might see some improvement in the overall gross margin.
Okay, fine. And just last question to understand the freight cost and the marketing expenses. Can you quantify what percentage marketing expenses we are doing for Q1?
So in terms of percentage, the current it is around 8% of overall revenue, which was somewhere around 6.75% of the last year.
Last year, which means for the full year or just for Q1?
No, Q1.
For Q1, and what percentage it was in Q4?
So Q4 was maybe lower than the 6.75 considering the overall base of the revenue.
Got it. That's it from my side. Thank you so much, sir.
Thank you. The next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. So, sir, you mentioned that the price hike was, like whatever, May and June, so 2 months, and that too for our 2 big products. So, still the price rise is reflecting as 2.5%. I'm just unable to reconcile that line. So,
yeah. So, when I said the goods got released, actually there is a time lag from when we release the goods from our warehouses and actually get consumed from where it get picked up. So exact time we will not be able to mention because there are a lot of inventories at the stockist level because we have a huge network of stockists. So we give you what I mentioned in my last answer was that we started releasing the goods from May and June. So the impact would be very, very partial.
Okay. Understood. Sir, historically our margins have been, in the range of 20, 22, 25%. So do you believe we'll be back to those levels, and if yes, by when? I know you don't give guidance, etc., but I'm just trying to understand because there is a significant consistency of margins in past 10 years versus last 1 year or probably this quarter.
So this quarter probably the impact is more because of this inflationary reasons. But if the prices coming down back to the normal level, we might see the improvement in the overall margin back to the earlier years.
Okay. And sir, how do we plan to use our cash? We intend to buy brands or what kind of strategy we have in terms of using of cash to kick up the growth plans?
So I think this, if you have attended our last investor call, we have answered the way like that. In the March 22, we announced the a handsome buyback amount to the extent of 170 odd crore, which is almost 50% or more than 50% of our PAT. And we have always been rewarding to our shareholders by way of either buyback or dividend. Apart from this rewarding to the shareholders, we have also invested in our ophthalmic line at our Values plant. So there also the capex to the tune of 70 to 80 crore will be invested.
Okay.
These are the bigger one where we are using our cash.
Okay. And sir, any outlook on export business which you can share, or are plans about exports?
So what is the question, Amit?
So basically, exports we have been doing decent enough, and API market is also there. So are we significantly planning to increase the export share in our top line, or what is the plan on the export front?
So yes, we definitely want to increase our sales, grow faster. So we will continue to invest wherever possible, and we will continue to take advantage of opportunities that seem attractive to us, after ensuring that the risks are also not significant.
But this export business, would you believe will be margin improving? Could be the lever for margin improvement, or no?
So right now it is definitely attractive from a margin perspective, particularly because of our US business. Going forward, as volumes go up, depending on which markets we cater to, margins can vary. We are definitely keeping a close watch on margins.
Okay. Thank you, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Manvardhan Bait from Laurel Investment Advisors. Please go ahead.
So congratulations on a good set of numbers. My questions largely got covered, but just to understand, since we've launched a large number of new brands, so just wanted to understand how is our focus towards those brands, and what are we intending, now that what is the marketing spend that is being done on the newer brands, and which ones are our sort of key focus areas besides the marquee ones that are already there?
Yeah, so a similar question we addressed in our last call also. Just to correct you, we have not launched multiple or more brands. In fact, we are, from the last year, we are consolidating our business. So we are focusing on our top 10 brands, out of which most of the brands are giving us a good delta moving forward. We are focusing heavily on our parent therapy basket of antibiotics and as well as electral enerzole therapy. Apart from this, as Sanjay also mentioned, we have launched a couple of divisions in the last 1.5 years, and we have started focusing on our nutraceutical portfolio in a big way. And along with that, now we are also focusing on a derma basket. So these are already areas where FDC was always present. We had a good base, but from the last 1 year, we are consolidating our positions into these markets. Having said this, yes, once we achieve a threshold and we stabilize these expansions, what we have undertaken in the last 1 year, probably we will be pushing some new launches. But as of now, the new launches are very minimal in the last 12 months.
Okay, fair enough. And sort of outside the 3 big brands that we have, and that is, or the top 3, so what are the next 3 areas of focus for us? And where do we see, the next 200 crore brand would be, what do you internally expect it to be?
Yeah, so very good question. Maybe just to give you a backdrop, Ziffy and Electral are already in the 300 basket. If you ask for the next brand which can make to a 200 list is Enerzal, where we are already above 100 crore landmark. So this becomes the natural choice which goes up the ladder. Apart from this, these top three, we also have Vitcofol, Zafran, that is azithromycin brand, Ziffy CV, Zocon, and Ziffy O. These are the next 5 brands which are in the vicinity of 50 to 100 crores. And gradually, with the focus of various verticals onto these SKUs or molecules, definitely we look at these molecules to be climbing up the ladder.
Fair enough, sir. Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Chirag from DSPIM. Please go ahead.
Yeah, sir. Thank you for the opportunity. So versus secondary market data, our India business seems to be revenue seems to be far stronger, higher. Anything that is changing over there in terms of the way, discounting that you are giving, rebates that you are giving, or, what is the change here?
So we have not changed any discounting structure. We are traditionally going the way we have been operating from historical past. There's no change whatsoever what we have made in our top 10 brands.
So then this is an aberration, sir. Do you agree that secondary data is also showing much weaker than primary performance that you've reported?
No, I do not know from where you are interpreting this, because our secondary data is pretty strong. If you are looking at the market numbers from IQVI, our growth rates are far better as compared to the IPM. And it is not an aberration because, as Sanjay mentioned in the opening remark also, last quarter we had a very handsome and high growth. On top of that, this quarter also, we have shown a double-digit growth. So, can you specify what difference you are talking about?
Sir, I'm seeing a 1% growth for the quarter that IQVIA is showing, and whilst our primary data that you've reported suggests a 9% growth YOY, which is why I was just highlighting if there is any change.
No, I don't think so. The secondary market growth is 1% because most of the brands have reported a double-digit growth. Our MAC reflections are all pretty high. If I can give you a number, maybe as per the June MAC, our growth rate is 11.5 compared to the IPM growth of 8.3.
Understood. So there's nothing that you want to highlight. Okay, fair point, sir. The other question was on the field force incentives. Can you quantify field force incentives for FY21 and 22?
So in terms of value for the year 22, it was around 61 crore rupees.
And 21, sir?
21, around 25 crores.
25?
Yes.
Okay. And do you see this number dramatically changing as a percentage of sales, sir, as we go along?
So the incentive is purely a function of sales. So as the sales grow up, the quantum of incentive will naturally go up, but not directly in proportion to sales, but with the growth in the growth percentage of the sales. So higher the growth of the sales, the percentage to in sales incentive will be by and large the same, but the quantum will increase.
But as a percentage of sales, it will remain the same, is what?
Yeah, by and large will remain the same because we have certain guidelines within which we operate our incentive policy.
Right. Okay. Understood. And sir, is our India business margin higher or lower than the company average margin?
So definitely India business margin is better than the overall business margin, considering the product that we have.
Understood. Okay, sir. Thank you so much.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. You mentioned that you have taken a 10.7% price increase in the NLEM portfolio. Is the NLEM portfolio roughly around 40 to 43% of our India sales? And what is the kind of price increase that you have taken in the non-NLEM portfolio?
So the NLEM portfolio would be somewhere around 45 to 50% with the increase and decrease in the sales. And you rightly mentioned we have taken the price rise of 10.7%. But what we were discussing in the earlier calls, the effective of those 10.7% increase will be coming in the second quarter as well. Because in the first quarter, the new price product may not be in the pipeline. So the full impact of the price rise will be seen in the Q2 of this current financial year. And as far as the non-NLEM portfolio is concerned, so which we have mentioned in the last call as well, so for non-NLEM, the price rise increase on a 12 months rolling basis. So as and when the products gets completed their 12 months period, we are eligible to take the price rise. So it's not on a entire financial year to year or on the 1st April basis. It's getting due on a every 12-month completion period.
Understood, sir. So in that case, what is the kind of price increase we are planning for the products where the non-NLEM products, which we would have probably taken price increase till now from April to July? What is the average sort of price increase we are seeing in the non-NLEM basket?
So I'll answer that question. Maybe normally we have maintained in the historical class our affordable marketing strategy. But this year, because of the overall inflationary conditions in the economic, maybe India, that we have gone ahead with the 10% rise, which is permissible. But again, as we say, that we cannot give the rough number because, as Sanjay mentioned, the percentage averaged out on the quarterly basis, on a YOY basis, is very difficult to comment as of now. But
I understand.
in all our products, wherever possible, wherever the competitive scenario allows us to do, we have done that.
I appreciate that. Thank you so much for that. Second, sir, on our export business, although we are growing from our very weak base of last year, but when we spoke about the export business last year, I think your commentary was that FY22 was more of an aberration. We should consider FY21 as the base, and the effort from FDC will be to grow from the base of FY21 export number. Is that still your ambition, or do you think this is Q1 results? It doesn't appear that we'll be able to outperform our export sales in FY21. So just wanted to understand if we want to sort of restate your ambition in the export business for FY23.
So Aditya, FY21 also was an aberration when it comes to our US business, and very specifically the US business profit share. I think we explained that we had a situation where two of our competitors in Timolol Maleate eye drops got out of the market. I'm not sure we went into so much detail, but these are the facts. And therefore, we were in FY21 able to take advantage of that situation where we got significant additional market share, as well as we were able to increase price. Okay, so yes, from a sales perspective, excluding profit share, you can use FY21 as a base. But what happened in FY21 in terms of profit share was an anomaly. So that's really where this year we find it very challenging to hit that same profit share number. Now, we do not, as a policy, share the breakup of sales and profit share because that's not really something we are comfortable doing at this stage. But I think, have I answered your question?
Yes, you have. Yes, you have. In fact, I was just about to make that recommendation on disclosures that even if you're not comfortable, let's say, disclosing sales and profit share separately, it would be very, very good from the management if you look at what your peers disclose, on a quarterly basis. They give a very neat, clean table on geographical breakup of revenue. And let's say if your profit share comes entirely from the US ANDA business, you can maybe include the profit share. You can add the two, profit share and revenue, and report it as one line item. But, to have a very clean, neat table where India, US, other exports and API, these four are broken on a quarterly basis, that would be very useful for your current investors and your potential investors. Otherwise, we have to keep hunting for data and clues in your press release, and sometimes we just might arrive at the wrong conclusion as to what is happening in the business.
Fantastic. So, point very well taken. We'll work on this. Thank you.
Thank you so much, sir.
Sanjay wants to add something.
Yeah. So I think if you look at our press release which we have submitted, the export revenue which is showing there includes the profit share as well.
What he's saying is give a breakup of US and wherever possible give specific countries, so FDC, SA, UK, so that anyway. So we will see, we'll work on it.
Yeah.
Any companies that you recommend we benchmark with?
Sir, thousands. I mean, you can look at Sun Pharma, Lupin, Glenmark, Dr. Reddy's, any and every company of your size and bigger have a very neat, clean way of reporting the top line breakup every quarter, which makes it very, very easy and practical for the investor community, again, both existing and potential, to understand how your business is evolving. And then in the Q&A session on such calls, we can focus on what is important rather than just exchanging facts.
Understood. Point well taken.
Yeah. So I would recommend India, US, other exports and API as 4 different line items, because if you go into separate geographies within other exports, it will be a very long table and the numbers will be very menial for some of those geographies, which wouldn't be able to sort of give much color on. So, I mean, I leave it to you obviously, but that's my recommendation.
Yeah, then it will become a geography discussion.
Yeah, exactly. So, which is why other companies also avoid that. They give US and others. So US is one line item, other exports is another line item, where you can sort of club the other geographies. Okay, so that was my recommendation. One more question on the other expenses. So obviously you mentioned your freight costs have gone up and so have the promotion costs. So promotion costs going up from 6.75 to 8% of sales, is that purely a function of the additional division that we launched, or is there an increase in the advertising rates that we are witnessing?
So the budget for the sales and marketing cost is as a percentage to our revenue. So when you look at the absolute number, so with the increase in the revenue, the budget or the actual expenditure.
No, sir, I'm asking that 6.75% of sales going to 8% of sales. So there is a increase as a percentage of sales also from 6.75 to 8. So that my question was specific to the percentage only.
So the reason being the accounting of the expenses is based on the actual receipt of the material related to the promotional item. So that can be a 1% here or there, maybe in the Q1 or in the Q2. But when we look at the year end, so by and large that everything gets cleared. And also, as you rightly mentioned, the increase to some extent is on account of the new division as well.
Got it. Just one last question. Sanjay sir in his comment mentioned inflation in freight cost. Can you give us a rough ballpark number as to how much inflation we would have seen in our freight rates?
So as a percentage, I would say about 0.5% increase in the overall logistic cost. As
Understood.
compared
And
to
sir,
the same period last year.
yeah. And sir, our annual report, when is it due?
So I think within the next few weeks you will get it.
Thank you, sir, and all the best for the future.
Yeah, thank you.
Thank you. The next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for taking my question. My question was related to gross margins. As you mentioned that, your gross margins have declined because of raw material price inflation and packaging material price inflation. Given you mentioned that, the full impact of WPI linked price hike is not yet reflected in this quarter and it will be coming in next quarter, should we expect the gross margin to go up from the current levels? And if you could quantify how much would that be in the next quarter?
Ladies and gentlemen, the line for boardroom has got disconnected. Request you all to please stay online while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Over to you, sir. Over to you, sir. This is the operator.
So, Neelam, are you there?
Yes, I am there.
So can you please repeat your question?
Sure. My question was related to gross margin. So given you all mentioned that the full impact of WPI-linked price hike is not reflected in this quarter, and the second quarter would be a better reflection, would we see an increase in gross margin? And if you could quantify what kind of gross margin can we see with the price hike in the next quarter?
So, Neelam, the exact quantification we will not be able to do as of now, but I can give you a broad guidance on that, considering the fact that the goods which have been sold in the Q1 are partially from the carry forward of the March quarter inventory and partially from the Q1 inventory. Now, whatever inventory which are going to be get sold in the Q2 will be purely almost purely of a Q1 inventory. Means the inventory with the increased sales price. So with this increased sales price, the margin will obviously improve in the Q2 as compared to Q1 margin. But having said this, we also have to wait and watch the impact, any further impact on the raw material and packing material prices, if the same whether remains stable or it's drop or increase further. So it will be a combination of the two parameter. On one side with the sales price and on the other side the raw and packing material. But the broad guidance will be that we don't see any major increase in our cost level on overall basis.
Got it. That's helpful. My second question is on other expenses. So we've seen a sharp jump during the quarter. And you mentioned one of the reasons is 15 crores of fair value impact on account of mark to market. But even if we exclude that, the growth on a YOY basis in the other expense line item is almost 25% versus our overall top line growth of about 11%. So if you could highlight any particular reason why the expenses have gone up?
Yeah. So if you are comparing on a June to June quarter basis, the increase in the overall operating expenditure is around 36 crore. Out of which, if we exclude that, about 15 odd crore, the remaining outside around 20 odd crore are largely because of the other expenditure, other operating expenditure, which includes about 10 odd crore increase on account of sales and marketing cost, about 3 to 4 crore on account of the production related cost, and a balance related to the logistic and the export related costs.
Got it. Okay, so is this like the sustainable base going forward, or are we envisaging further increase from here?
So in the previous call, which we answered, we are accounting for the expenditure of the promotional on the basis of the receipt. So in some of the quarter, when the receipts are on the higher side, the expenditure can go up. But coming on the next quarter, if the overall procurement on the lower side, the cost can go down as well. So, but we can look at on the year-to-year basis where the overall all the cost as a percentage to revenue get nullified.
Got it. My next question is that during the quarter, I see that our medical representative count has increased from roughly 3242 last as on March to 3615 this as on June. So is this mainly because of the new division that has been added? And if you could please highlight what this division is and what's the strategy for this division going forward?
Yeah. So in our last call also, we did mention that we have launched Zocon division as a new division. So we have added almost 400 odd people in this division. Now, as I mentioned earlier, that we are focusing on the Derma basket through this division because Zocon is a flagship brand, and we have segregated the Derma therapies from other divisions, mainly Proxima and Lumina. These are the two divisions which were looking after these therapies. So our overall strategy moving forward is that this is one area probably FDC would like to focus on, apart from our antibiotics, electrolyzazole, and nutraceutical, which I mentioned. So this is one of the growth drivers for the next couple of years, which we are targeting.
Got it. Wanted to understand, our exports business have grown quite well this quarter on a YOY basis. So what drove this growth in this business? Almost 23% if I include exports and export formulations and API.
Yeah, so it's mainly on account of the increased supplies to our US market. So US revenue alone has increased by 7 crore on YOY basis as compared to the last year, June 21.
Got it. So are we expecting this kind of growth trajectory to continue for the rest of the year?
Yeah, so by and large, yes, I would say.
Got it. Okay. Lastly, my question is on the domestic business. You mentioned that during the quarter, our new product introduction contributed about 1.8% to our overall growth. So could you highlight what are these new products?
So these are mainly line extensions of our existing brand, couple of which are Electral Z, what we launched. We have also extended Entro Plus, which I mentioned last time also. We had Entro Plus sachets only. We have launched capsule in the last quarter. So we have mainly gone by line extension, and we have not entered into a new molecule setup as of now.
Got it. So for the domestic business, it's pretty heartening to see us growing at almost 10% on a high base. Should this business continue to grow, let's say, mid-teens for the rest of the year?
Yeah, we are very positive about it, because as I said that from a historical standpoint, now we are not dependent only on the top 3. In fact, all our top 10 brands are firing in double digit, and we are focusing on these top 10 brands through various divisions and separate verticals. So we are very optimistic that this growth trajectory we would be able to continue.
Thanks a lot, sir. That's it from my end, and all the best.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir. Sir, I would second the views of our earlier participant on going on with further detailed presentation for the benefit of investing community at large. And sir, if you could give us some more understanding on what's the vision of the company going ahead in the product profile in terms of the market share and the size of the business which we are eyeing going ahead, and also what are the key variables for the business that affect the margins?
So that's a very broad question, and probably will require a very long answer. But in a nutshell, see, we want to continue this both momentum that we have gained in the domestic business, in export business. So overall, growth is very important. We continue to focus on our key areas, which are oral rehydration drinks, the anti-infectives, ophthalmics. We invest in strengthening our brands. We will invest in markets where we see potential for us to get larger market share, expand our margins. So in general, we'll just be very focused on growth.
Correct. So you and about the variables part, what should be kept in mind for our business? The variables in the industry which results in the fluctuations for the margins?
So are you referring to like how recently there was an increase?
Yes. Yes, sir. For recent, when we look at your quarterly performance, sir, it is for investing community, we look at the continuity and the sustainability of the numbers to value a company. So for us, how should we look when we look at your numbers, and what factors should we investors and analysts should be looking for, so that we can understand in much deeper, and also we have more predictability on your numbers. That was my point. Since you mentioned about the COVID factor, when we are comparing your last June 21 with current June, you did mention that there was a benefit of COVID factor for that quarter. So even if you could quantify for us, what was the impact on the bottom line because of that one-off item, that would also suffice.
Sure, I'll let Sanjay take this. Yeah. Yeah, that's what. So two parts. I think one is variables in general, and second is specifically on the one-off, for the write-off for favipiravir.
Yes. So on the one-off kind of favipiravir, where we had last year June 21, we had a sale of somewhere around 17 odd crore. So this is purely a trading product at that time. So margin by and large was very low. But from a top line perspective, if you want to take the guidance, then what I said, the overall revenue growth which we are looking at in the current quarter is somewhere around 8. But had it been that sale was not there in the June 21 quarter, the real growth would have been somewhere around 15%. So I think from the revenue perspective, that should be the guidance for the future perspective. In looking at the actual number versus the actual, excluding the one-off item in the last year. On the other variable like write-offs, which we have already done in the March 22 quarter, where we had certain inventory related to the favipiravir. So that write-off we have already taken. So we don't see any further write-off on that side, which are in the nature of one-off item.
Sir, kindly correct me if I'm wrong. So you told 17 crore was the impact from the COVID part, that too on the trading, that impacted the revenue, but the margins were lower.
Yes.
But sir, then how should we understand this 127 crore bottom line for June 21 and 90 crore bottom line for June 22? How to make good of this, because the top line, even if we remove the trading aspect, the top line was 445 crore for June 21, and this time it is 493 crore, whereas the difference in the profitability, there's a huge change. So if you could explain what factors have enabled that is resulted in these margin fluctuations, lower margins.
Yeah, so you rightly mentioned there was a profit of around 127 crore on a PBT basis in the last year, June 21. Now, as we discussed in the previous call, the last year profitability and this year profitability, the major impact was on account of the increase in the raw and packing material, which has impacted our overall margin. So this was, we can see one of the major items which has eaten away our profitability for the June 22 quarter. Secondly, in the last year, the other income portion was significantly higher considering the market condition, whereas in the current quarter, the same was not there because of the market condition. And I also mentioned that these correction in the market has already been reversed post-June. So these are the two major factors apart from the other overall increase in the operating costs, which are around 20 odd crore. So these are 2 or 3 variables which has impacted the overall profitability for June 22 quarter.
So the packaging cost was 20 crore. That is what you quantified, sir? The impact of packaging cost from June 21 to June 22?
22 crore is the overall increase in the operating cost as compared to the previous year June 21 quarter.
Okay. And major of it is because of the packaging aspect.
No, so this 22 is over and above the increase in the raw and packing material cost.
Okay, so could you quantify how much was the impact?
Yeah, so if you want to take the impact on account of raw and packing material, which is around 5% of our top line. So we have a top line of 491 crore. So total impact on account of the prices will be somewhere around 25 crore rupees.
25 crores, correct. Right. And sir, about the increase, now with the increase, the price rise which we have taken, sir, of the total portfolio, what percentage of our sales would be benefited from the increase in the 10% increase which we have taken? And what would be its impact when it will be totally going down to our bottom line, or it will look after first the cost will get nullified? If you could explain, since for this quarter we have the inventory in the pipeline.
So the price rise which we have taken is for the scheduled formulation, which is our 45% of our overall portfolio. So we will get benefit in the going forward.
So this 10% hike will, what portion would go into the incremental margin, and how much will be the nullifying the cost aspect?
So the price rise is purely directly going to the bottom line, unless there are the other factors which are like in the nature of raw and packing material price increase, which can nullify. Otherwise, all price rise goes directly to the bottom line.
Okay. So you explained that 45% of our total revenue, there is an impact of 10%. That is attributable to the bottom line if the other variables are is remaining the same as have been this quarter. This is a correct understanding.
10% of our domestic formulation business.
Okay. Can you quantify the number, sir? The total sales of the domestic
so
that will get
for
impacted.
The current quarter June 22 is somewhere around 423 crore.
Okay, out of the 493 crore.
Yeah.
Correct, sir. Sir, on the other income part, last question and then I'll come. Sir, other income part, sir, you did mention, but if we take the impact from June 21, it is to the tune of only 4 crore rupees. It was 23.4 and this time it is 19.4. So 4 to 5 crore is the impact. That is mainly because of this hardening of yields that you have mentioned, mark to mark.
Yes.
Okay. Yes, yes. Yes, sir. We hope for more discussion, and also, sir, to have a better understanding in the form of the presentation being given, giving more color and more illustrations. So that would give us more understanding and more material to discuss. And thank you for, and we look forward for the continuity of the calls from the management team, and all the best to you, sir. Thank you.
Yeah.
So, sir, for the seasonality part, last point, sir, I forgot. For the seasonality part, if you could give some color, what do seasonality part plays in the for the business of the company? There are lumpiness in the numbers, or we have a linear trend for the remaining 9 months?
So I'll take that question. Maybe since we are mainly dependent on our antibiotic sales, so second quarter normally is the highest or most potential from our overall business standpoint. But having said this, since we have worked on our other portfolio, by and large, third quarter would be slightly lean or rather off-season kind of a scenario where antibiotic sales goes down slightly, and also the ORS category of product, energy drink, goes down. So all our 3 flagship brands, if we talk about, the third quarter is the leanest. But second quarter, it is maybe very promising for all our top 3 brands.
Thank you. Mr. Kapoor, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Devraj, retail investor. Please go ahead.
Sir, thank you for this opportunity, conference call, and sir, buyback. Sir, is it possible to get to know that the 475 rupees buyback price, sir, how that was arrived, sir, if possible to interpret.
So, if you have noticed the buyback prior to we announced the last buyback, which was priced at 450, and the market price of our FDC was somewhere around between 350 to 400, and we applied some premium based on the last 12 months rolling returns of that price. So this is the broad formula which we applied to arrive at the 475 rupees.
Okay, thank you, sir. And sir, in the future also, we will be over the next 10 years period, we will be continuing, right, this buyback in amount, different amounts.
We can't comment as of now. If anything is there on that side, we will surely update you on that.
Okay, thank you, sir. Thank you.
Thank you. The next question is from the line of Dhruv Beda from Jairam Stock Brokers. Please go ahead.
Yes. Yeah, congratulations on good set of numbers. Sir, we have overall grown by 11% in revenue terms and 7.5% in volume terms. And the major growth is contributed by our top three products, Energal, Electral and GP. Can you tell us the growth in these three products in terms of volume and their contribution to the total sales?
So, for the quarter, GP has grown by 11%, Electral by 32%, and Energal by 22%.
In terms of volume?
The increased overall revenue on account of GP is around 7 crore, Electral by 27 crore, and Energal by 8.7 crore.
So, by this amount they have grown?
Sorry?
By this amount they have grown, no? This is not their contribution. Yeah.
Incremental sales over the last year quarter.
Okay, okay. So, what were the factors that drew this growth? Because this seems to be exceptional growth.
Yeah, so I'll tell you, last year there was a COVID upsurge which was experienced by the whole IPM, not only FDC. Because last year the entire country was taking medicines due to COVID, and though our therapies were not directly into COVID, but overall antibiotics, Energal, Electral have had a very, very high sales. So to be on a positive side, we had planned this strategy at the start of this financial year itself that we'll go very aggressive with our top 5 brands, and we have chalked out a strategy how to move about, and that is why probably we had gone with the expansion which we mentioned. So I did mention that we came up with the Zopon division, but by virtue of that expansion we could streamline our overall therapy basket within the parent divisions. Now, Electral we went very aggressive with, and we changed our secondary tactics into the market, and this was one opportunity which we leveraged just to combat the higher volumes which were there in the last year first quarter. The strategy was such that we did try and milk Electral, Energal, and the market was also very supportive. If you might have seen, the IPM itself, except for maybe couple of therapies, it rebounded pretty well. So it was a very thought of strategy executed well by the sales team in the market.
So can we expect this growth to continue in subsequent quarters?
So again, we are planning in that fashion. We are very aggressive, but as I said that all these plans are plans till the time you don't get the execution right and also the results right. But yes, having said this, the trends are very encouraging. We are continuing a good run. The only thing is the secondary factors are always there. If you want to grow in the market also should be buoyant, and as you know, these days conditions do change. We have seen in the last 2 years of COVID the ups and downs in the IPM overall. But having said this, if the IPM continues the stable run in the future, we definitely are working on outperforming the market.
How we did in export market as far as electoral is concerned?
So it's going on. We are continuing to sell electoral in Myanmar and UAE and some of the markets where we have launched the brand.
So did it grow at the same rate or more than the domestic rate?
So the base is lower. At the same time, we don't have large field forces in these markets. So it's difficult to give you a clear guidance on this.
Okay. Thank you, and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Neelam Punjabi from Perpetuity Ventures. Please go ahead.
Thanks for the follow-up. I just wanted to know what is our net cash as on June?
So it's somewhere around 750 crore.
750 crores. So what would be our strategy for cash deployment going forward? You mentioned that we are expanding our one ophthalmic line and investing 70 to 80 crores there. But what about the remaining cash?
So we did answer this question in the last call as well, where I mentioned that we are doing these rewarding the shareholders by way of either buyback or by way of dividend. And apart from that, we also do the required capex wherever we require, like which I mentioned about the ALP4 project, where we are going to spend about 70 to 80 odd crores, and any other operating capex which are required as a part of replacement and upgradation.
Got it. Thanks a lot.
Thank you. The next question is from the line of Manvardhan Baid from Laurel Investment Advisors. Please go ahead.
Thank you for allowing me to ask a question again. Just wanted to understand this capex that we are doing on the ophthalmic side. What would be the asset turn on this capex? What kind of top line do we expect out of this capex?
So as of now, we will not be able to give any number on this capex side. But once we have any guidance on that, we'll surely share with you.
Okay. But I mean, usually what is sort of in the current ophthalmic line, what are the asset turns that are there? I mean, this would be similar, right?
Sorry?
On the current ophthalmic line, what would be the asset turn that would be there? This would be in something in line with those asset turns only. It won't be different, right?
Can you repeat the question?
Sure. So on the current ophthalmic line, what would be our asset turn on the current ophthalmic line? I mean, my understanding would be that this would be similar to the existing asset turn only, just to...
So, see, we have a few lines, so I'm not sure which one you're referring to, and as far as capacity utilization is concerned, nothing has changed.
Okay.
We don't think anything will change going forward.
Okay, fair enough. So I'll leave it to maybe at a slightly later date. We'll come back on this question. One more aspect that I wanted to get your views on is our sort of the online platforms that have come, and how much are they contributing to our sales? What is the approach that we are taking towards these platforms?
So again, online platforms which are there, they are selling our products, but as of now, we are not directly associated with any of the online platforms. They are purchasing from the open market and catering to the consumers. This is our traditional prescription base. What online platforms are normally doing is they are replacing the chemist, your nearby chemist, and supplying directly to the consumers. But definitely, when a demand gets generated or order is placed on the online platform for any of our brand, they source the product from some of our stockists based upon their convenience. So it doesn't have any impact on our business, neither positive or negative as of now.
Okay. And in terms of, increasing visibility, or in terms of funneling orders towards FDC's brand, is there something that can be done, or something that is possible on the online side?
So again, as I said, that we have brands like Electral and Enerzal where we work on visibility aspect also apart from our traditional prescription business. But apart from these two brands, we are completely dependent on our prescription sales, and we don't go in for any visibility of any of our brands. Electral and Enerzal, the only exception where we do use some visibility tactics along with our traditional business.
Right. Got it, sir. Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Varsha Rani Katre, Company Secretary, for closing comments.
Thank you. Thanks to all the participants of this earnings call of FDC, and thank you for expressing your views and recommendations. In case if you have any concerns, please reach out to us on investors@fdcindia.com. Thank you again. Over to you, moderator.
Thank you. Ladies and gentlemen, on behalf of FDC Limited, that concludes today's earnings call. Thank you for joining us, and you may now disconnect your lines.